What is up, guys? What is up? Welcome to another edition of Mind Renovation Nation. I am your host, Nathan Bush, and we are here to talk about all things small multifamily and help you grow your portfolio as a small multifamily real estate investor. Today's show, I've got an awesome show for you today. For those of you that know me, know that I am a numbers guy and I love to focus on the numbers. So if you've ever wondered, like, what are some basic numbers? What are some KPIs? What are some things that I need to know as an investor in order to make me more successful? And I don't want to go all through the spreadsheets and I don't want to get into a detailed analysis or rental comps or all that kind of stuff. I just want to know, Nathan, tell me the numbers that the big institutional asset investors, the big guys, they're investing throughout all of the entire country. What are the ratios they run? What are the management KPIs that they're looking at? And what is the number one number that they need to know in order to grow? Well, today's show, we've got all of that covered for you and more. Today's show is jam-packed, lots of information and a lot of things to cover. In fact, I've even brought some slides with me today to share with you some basic overviews of numbers. I'm calling this the 3-2-1 of numbers that you need to know. The 3 magic ratios, the 2 management numbers that you need to know, and the 1 number you need to focus on as a real estate investor if you're really looking to maximize your growth in your portfolio. So I got a story for you. A couple years ago, I was working with a management organization and they wanted to buy 5,000 properties between Texas, Kansas City, Indianapolis, St. Louis, and some in Iowa. And I had the wonderful privilege of being a part of that growth in that organization. And there were some numbers that were so important to the investors that as we continued to buy these homes, we had to get these numbers right. And so those are the numbers that I've learned, come accustomed to, and I'd like to be able to share with you. And these are the numbers at Red Maples that we look at whenever we're looking to partner with new investors. So a lot of times people will DM me or they'll message me and they'll say, "Hey, Nathan, I know that Red Maples runs an amazing property management business. Will you guys take on our portfolio?" And I don't know. I have to run the numbers and I have to see what your portfolio looks like after management fees are involved and if you're going to be successful or not. Sometimes it doesn't make sense. You have your numbers out of whack, and even no matter how good we do as a manager, you're still going to feel pain. And that's not what we want you to feel. We want you to feel success. Now, is there sometimes that we have to go through some temporary pain in order to have success in life? Well, yeah, of course. If you're familiar with any of John Maxwell's work, you'll learn about the law of the rubber band and temporary pain in order to have gain. And so, anytime you're having success, it doesn't matter what it is, it starts off well, and then there's always some type of stretching that will happen. And stretching at first is painful. Like when you're first being stretched and you're not used to stretching, there's some pain involved. But what happens is that over a period of time, if you do that stretching and you do the stretching consistently, that actually becomes to your advantage and you get used to the stretching. And then the stretching starts to become part of your accelerated growth, just like that rubber band that stretches out and will never come back to its original size. That's what happens with us internally when we're able to stretch ourselves and we're able to learn new things. So that's what I'd like to share with you today. I'd like to stretch just a little bit and maybe take a second and let's learn about the numbers. Because when we learn about the numbers, as much as this may stretch us in order to get through it, it will help you achieve success in your real estate. So here's the first number that I want you to pay attention to in the 3 magic ratios. So there's 3 of them. The first one in that 3 magic ratios, the ratio you need to know, is your gross profit margin. So gross profit margin is so important when it comes to real estate investing. And the margin is how much money you have left over, your net income, divided by your revenue. So net income is revenue minus expenses, and your revenue is all of the income that's generated from the property, including rent, parking fees, late fees, the whole 9 yards. And you want to find that number, multiply whatever that number is by 100, and that will give you your margin. Now, I do some industry benchmarking, and we utilize a number of websites in order to pull out the industry benchmarks that you need to know as an investor. And one of those websites that we utilize is called readyratios.com. Readyratios.com. If you're looking for the golden nugget today and you'd like to know a little bit more advanced on what other things that are measurable and comparable to the industry to see if you're within benchmarks, go to readyratios.com and you can look up for real estate investors specifically in your industry what industry benchmarks are out there and what things should look like. So after management fees, we like to see you within the benchmarks between, let's say, 11 to 16%, but let's say double digit margin. You have to have double digit margin in your portfolio. We find it to be important for you to be healthy, for you to be stable, for us to be able to continue to grow with you. And if not, we've got some conversations that we need to talk about on what we're going to do to get there. The second ratio that you need to see, and it's been up there on the screen for a while, and I'm sure that you already know what leverage is. Leverage obviously equals leverage. And the reason I have that on the screen, and no, it's not a typo in this situation. I actually have leverage equals leverage because the more you understand leverage and how it works, the more likely you are in order to be able to succeed in small multifamily real estate. Now, oftentimes people are over leveraged on their property. And I don't have the benchmark up there, but we teach all of our investors, and we truly believe this at our core, that the maximum leverage that you want on your portfolio is 50%. Now, what is leverage? What are we talking about? If you're interested in knowing what leverage is, that's all of your debt divided by your total assets. Total assets includes any cash that you have on hand in the value of those properties right now, so we can pull equity out if need be in order to hit our margin numbers. So the second ratio that you need to know is leverage. You never want to be more than 50% leveraged on any property. Well, the mortgage company said all I had to put was 20% down, or I did a no money down deal. Look, guys, we call that very risky in our industry. Very risky. You can do that. There is courses and there are people that will teach you to buy money with no properties with no money down. I'm just saying to utilize a third-party manager in some of these risky deals and these different risky scenarios that are out there. I'm just saying that it's probably not wise to get a third-party manager involved with underperforming, financially tapped portfolios, right? We want to find things that are leveraged properly. Now, will we take somebody on that only has 25% equity in their portfolio? Maybe. We have to have a discussion about it. See, these are things that you have to know and have to uncover and have to unpack and talk through. Now, the third ratio, and yes, it's a magic ratio. I live in and we move with this ratio in our organization. And that ratio is the interest coverage ratio. What is the interest coverage ratio? What we're looking for is how many times can you cover your mortgage payment after everything's paid? So if you're wanting to know about the three magic ratios that all the large financial institutions are using to explode and grow and hit these goals, these are the three ratios. And yes, in your interest coverage ratio, we want to see that you can cover your interest payment by 3 times. By 3 times. Okay, so there you go. So there you have it. There's your three ratios that you need in order to scale like the large institutional asset managers. And you know where I'm pulling the information from because you can go to the ratios website and find some of that information all for yourself. All right, what is the next numbers that you need to know? Well, you need to know Management 101, the two best ratios to know in property management are these two ratios here. These are the two ratios that if you had to pick any KPIs, what are the two basic KPIs, key performance indicators that you should be reviewing? It's these here. The first is tenant retention rate. So your tenant retention rate is your number of tenants renewing their lease divided by the total number of tenants. Now, just because this management KPI is there doesn't mean that if a ratio is not in a line in any one of these things, that, oh my gosh, the world's coming to an end, my portfolio is failing. That is not true. Okay. A tenant retention ratio is a managerial KPI that gives you an understanding of what's going on. And in some cases, if you're doing a full kick them out and put new tenants in at higher prices, renovation style project, these ratios can be different than stabilized assets that have been around for 5 years and have been seasoned. Okay. So we want to make sure that we measure the tenant retention rate because that will help us from a management perspective to know where we're at. The second ratio that's important to know and the rate that you'd want to pay attention to is your maintenance expense ratio. Okay, so what is your maintenance expense ratio? Your maintenance expense ratio is your total maintenance expenses divided by your gross potential income. So your gross potential income, and your gross potential income is the income if the property was fully occupied and all the tenants had paid, how much should you be making? And that will give you your maintenance expense ratio. Well, you say to me, well, Nathan, what about if the property, has got high occupancy or high vacancy when I turn it over to you? We only have an 80% occupancy rate, or we have a 20% vacancy rate. So our maintenance expenses are too high. They're too high. How do you know they're too high unless you compare them to industry benchmarks about what that expense ratio should be off of gross potential income? It takes a couple of weeks to months, depending on how vacant your property is and how many vacancies you have, in order to renovate those, fill them all up, and put tenants in them. All right. We had one investor that was with us that started with 2 properties, went to 24 properties with the Red Maples portfolio. And what was interesting about that investor is that we had an average days on market of 15 days. So we can fill them up fast. The challenge is that you need to know what that maintenance expense ratio is and not be upset if you have high vacancy because you have some maintenance expenses coming in on your property. These are things that you have to pay attention to. And I'm not going to get too deep into the industry benchmarks of the ratio for the maintenance expense ratio. Go look it up yourself. Go find out what it is. Run the numbers on your properties. I gave you some benchmarks just to get you set so you could have a foundation and know where to go to find that information. All right, now the last number to know if you want to grow is your net operating income. You've heard in real estate investors, you've heard people in your circles talk about net operating income, but I got maybe a different little spin to pay attention to today. So net operating income is your revenue minus your operating expenses. Your operating expenses. Let me say it one more time. Your operating expenses. There are other expenses beyond just your operating expenses that don't tell you your net operating income. Your net operating income, operating expenses are things like maintenance, insurance, property taxes, those types of things. Your income tax bill is not part of your net operating income determining if you can grow or not. The fact that you have a high tax bill, look, that's not your portfolio not performing. That's mismanagement of finances, and you probably should go seek a financial advisor to make sure that everything is done correctly within your portfolio. So there you have it, guys. We talked about a lot of things today. We went over this lightning quick, and I told you I like to keep these episodes short. However, let me recap some of the things we did talk about and cover today. We talked about the 3 magic ratios: your profit margin, your leverage. We also talked about your interest coverage ratio. We talked about how to find what industry benchmarks look like. We also talked about the 2 management ratios that you need to know. So there's 2 management KPIs, and then the one number that you need to grow your net operating income. All these things are essential and they're critical in order for you to be able to hit your real estate investing goals and grow, especially if you're trying to manage your business like a big business. I can't tell you how many investors I have conversations with on a regular basis, and I ask them, please tell me what your leverage is on your portfolio. Oh, I think it's about. You think it's about, or you know? Well, I think it's about. All right, do me a favor. Let's get that information and let's actually have a conversation about how much leverage you do have on your properties. Do you know what the value that you could resell your property for right now, or if you needed to get a mortgage on it, how much you could cash out? No. Well, let's take a look at what those comps are and let's find an accurate number. We have a couple of core values in our organization. One of those core values is seek the truth. Seek the truth. And when you're a real estate investor, especially in small multifamily, I feel like there's so many mistruths out there. There's so many partial truths out there. The tenant gave me income statements or income documents, but they're not the entire full month's worth of income documents. It's just one and then a scattered one a couple months ago. Look, you got to seek the truth on their income. What is their current income? The same is true when it comes to knowing your own numbers. Don't think you know the numbers, get them down. And if you're only going to measure a couple of different numbers because you don't have the time to document all this stuff and go through this entire process, at least do the right thing and get your numbers under control. And by doing so, guess what? I want you to grow. And that's why we do these live casts. I want you to learn. I want you to grow. I want to encourage you. I want to challenge you to excel in the small multifamily real estate investment industry. Uh, I want you guys to stay tuned in to Mind Renovation Nation. I have got a number of shows that are coming up that you will absolutely love. It's not every single one is going to be about numbers. Not every single one's going to be about process. Not everyone's going to be about leasing. Not everyone's going to be about leadership. Not everyone's going to be about communication. But we're going to go through a variety of those different topics. So find the one that resonates with you. If you do like this content, I'm going to ask that you subscribe if you're watching us on YouTube to the YouTube channel. Hit that bell so that you're notified. If you're watching us on Facebook, I do want you to go ahead and like and comment kind of the most interesting thing that you learned down in the comments below. And if you happen to watch us on any of the other channels, please save, bookmark those things, like, share, tweet out all of the information that you're learning from our live cast, because the only way that we can have success on this program and continue to provide the education for you is if the audience continues to grow like it has. And guys, it has been a wild ride. I cannot believe how many people are tuning in to Mind Renovation Nation on a weekly basis to learn some of this information that has taken me and my partner literally years to uncover and unpack. And I try to synthesize it and make it simple for you. So with that said, you guys have a good week. It was nice talking to you. And let's keep continuing to grow our small multifamily rental portfolios. Thanks, guys. Bye.